So welcome to all of you Shiksha 360, and today basically we will discuss the chapter number 3 of LRAB, that is legal and regulatory aspects of banking, chapter number 3 part 1. Clear? Chapter number 3 part 1. Clear? Basically in the legal, basically there are many acts. Clear? Basically there are many acts basically under which section what is mentioned. Clear? Basically under which section basically what is mentioned, or basically under which act. Clear? So these types of question you will find in the examination. Clear? So we have to cover all these things. Clear? Basically when we will do revision, just do revise everything at least 2 to 3 times. Clear? At least 2 to 3 times, so that you are able to understand all these things. Clear? So that you are able to understand all these things. Clear? So let's start our discussion. So first of all, basically the Banking Regulation Act, what it provides, the Banking Regulation Act basically provides for regulation of the business activities of the banking companies. Clear? So what the Banking Regulation Act provides, basically Banking Regulation Act provides the regulation of the business activities. Clear? Regulation of the business activities of the banking companies. Clear? Accordingly, the act empowers the Reserve Bank of India. Clear? Basically this act basically gives power basically to the Reserve Bank of India to issue directions for regulating terms and conditions. Clear? Accordingly, the act empowers the Reserve Bank of India. Clear? Empowers the Reserve Bank of India basically for what? Basically to issue directions for regulating terms and conditions of making of loans and advances. Clear? For regulating terms and condition of making of loans and advances and other matters, including acceptance of deposits. Clear? Of making of loans and advances and other matters, including acceptance of deposits. Clear? So the Banking Regulation Act also imposes certain restrictions. Clear? The Banking Regulation Act basically also imposes certain restrictions basically on loans and advances. Clear? This act, first of all, here basically we will discuss that this act basically empowers, gives power to issue directions for regulating terms and conditions basically of what? Of making the loans and advances. And also it imposes basically certain restrictions on loans and advances to the directors of the banking company. Clear? Basically restriction basically where it apply. Restriction basically it is applied to the directors of banking companies and companies and firms in which they are interested. Clear? And companies and firms basically in which they are interested, it means that basically they are member of it. Clear? Basically they are member of it. Clear? It is the meaning. This is the meaning of that point. Okay. Now move to the next one. So the act also contains provisions. Clear? Basically that this act also contains provisions for creation of a reserve fund. Clear? Basically for creation of a reserve fund, basically which we have to discuss under the part 2. And transfer a percentage of profit basically to that fund. Clear? That basically which act, that is the Banking Regulation Act, basically contains provisions for creation of a reserve fund. Clear? Basically for what? For creation of a reserve fund and transfer of a percentage of profits. Clear? And transfer of a percentage of profits basically to that fund. Clear? Basically there are also provisions for maintenance of cash reserve, liquid assets and assets in India. Clear? Basically there is also provision of maintenance of cash reserve, liquid asset and assets in India. Clear? Cash reserve here basically they are asking, that is cash reserve ratio. Okay. Cash reserve, that is cash reserve ratio. Okay. Liquidity, that is liquidity ratio. So basically we have to maintain all these things. Clear? Basically, and if we are not able to maintain, what is the penalty? All these things basically we have to discuss in this chapter. Very, very important for the examination point of view. So let's start our discussion. Clear? First of all, basically we have to discuss regarding the Banking Regulation Act. Clear? First of all, basically we have to discuss regarding the Banking Regulation Act. So the Banking Regulation Act authorizes the Reserve Bank of India. Clear? Basically authorizes the Reserve Bank to issue directions basically to the banks Under which section? Under section 21 and 35A of the Act. Clear? First of all, basically we have to discuss two sections. First one is section 21 and second one is section 35A. Okay. So what these two acts are related to? Clear? So while section 21, clear, basically while section 21 gives the power to regulate advances by the banking companies. Clear? So section 21, I will write it here. What section 21 basically it gives power to regulate the advances. Clear? Basically it gives power to regulate the advances by the banking companies. On the other hand, section 35A gives powers basically generally to regulate banking companies. Clear? Section 28 basically 21 is specific regarding to the advances. This is basically general to regulate banking companies. Clear? Generally to regulate banking companies. Clear? Overall. Okay. So now let's discuss section 21. So the Reserve Bank has been issuing directions. Clear? The Reserve Bank has been issuing directions from time to time. Clear? The Reserve Bank has been issuing directions from time to time under section 21 regarding what? Basically regulating rates of interest and other terms and conditions. Clear? Regarding under section 21 regulating basically what? Regulating rates of interest and other terms and conditions of acceptance of deposits and making of loans and advances. Clear? That is basically regarding regulating rate of interest and other terms and conditions of acceptance of deposits and making of loans and advances. Clear? And making of loans and advances. Clear? This is regarding to the section 21. Clear? Basically this is regarding to the section 21. Now move to the next one, that is caution and advice. Clear? That is caution and advice. Clear? So apart from the giving directions, clear, basically apart from the giving directions, the Reserve Bank may also caution or give advice to the banking companies. Clear? The Reserve Bank basically may also caution or give advice to the banking companies. Further, basically what section 36 says that? Clear? Basically what section 36 says that? Section 36 of the Banking Regulation Act provides that the Reserve Bank may caution or prohibit banking companies. Clear? Section 36 of the Banking Regulation Act provides that the Reserve Bank may caution or prohibit banking companies generally or any banking company in particularly against any transaction or class of transactions. Clear? Or class of transactions. Clear? That is basically section 36. Basically what it will tell, basically section 36 it will prohibit. Clear? Section 36 basically what it tells, basically it will prohibit. Section 21 that is basically advances, and section 35A that is overall. Clear? Section 35A that is basically regarding the overall. Clear? So basically this section gives the caution. So here basically question this one. So under section 21 of the Banking Regulation Act, please tell fast what is the answer. Under section 21 of the Banking Regulation Act, RBI issues direction to the banks in respect of loans and advances, audit and inspection, capital structure of the banks, or corporate governance. Clear? Or corporate governance. Clear? So what is that correct answer? Option number A is the correct answer. That is loans and advances. Clear? That is loans and advances. Okay. So in the examination, basically they will ask these types of questions. Just you have to understand the topic. Clear? Just you have to understand the topic. Directly you are able to answer the questions. Clear? I see basically many of the students basically very easily score 70 plus marks. Clear? Just you have to go through the topic very well. Clear? Just you have to go through the topic very well. Our target main is basically 55 plus marks. Our target is clear. So that basically we will reach near about 50 plus marks. Clear? If we make our target little bit more. Okay. Very easy paper. Clear? Among the three, this one is easy. Just you have to go through all the topics. Clear? Now move to the next. RBI can regulate acceptance of deposits. Clear? Basically RBI can regulate basically acceptance of deposits, including rate of interest on deposits by banks. Clear? RBI can regulate basically acceptance of deposits, including rate of interest on deposits by the banks, basically under which section? Clear? Basically, we know that basically under section 35A. Clear? So you will find that basically how they will confuse you. 35, 35A, 35, 45, or we can say that this one is 35A. So here we know that basically it is 35A. So this one, that is 35A of the Banking Regulation Act. Clear? 35A of basically which act? Of the Banking Regulation Act. Clear? So option number B is the correct answer. Clear? In this case, the option number B is the correct answer. That is 35A of the Banking Regulation Act. This one is the correct answer. Now move to the next one. That is acceptance of deposits. Clear? Now next one, that is acceptance of deposits. Clear? So what type of deposit basically is to be accepted? So the types of deposits. Banks accept basically different types of deposits. Both the, we know that basically there are two types of the deposit. First one is the time deposit, like fixed time deposit, basically like FD/RD, fixed deposit or recurring deposit. Second one is the demand deposits, like basically which we will, when we will demand, basically we will take that, like in the current account, saving account. Okay. So basically bank accept basically different types of deposits, both time and demand deposits basically from the public. While time deposits basically like fixed deposits or recurring deposits are payable. Clear? Basically like we can say that like fixed deposit or recurring deposit RD are payable basically after an agreed period. On the other hand, basically demand deposits like deposit in the current account or saving account are repayable on demand. Clear? Basically that are repayable on a demand. Clear? Subject to the terms and condition of the deposits. Clear? Basically subject to the terms and condition of the deposits. Okay, so this is, so the period of the deposit. Clear? Further, the period of the deposit and the rate of interest applicable to the deposit. The period of the deposit and the rate of interest basically applicable to the deposit are matters to be depositor and the bank under the terms of the deposit, subject to any directions given by the Reserve Bank of India under this regard. Like you can say that basically we have a fixed deposit of 5 years. Why you will basically will go with a 5-year fixed deposit? Because in that basically there is maximum interest, that is 6.2%. Clear? In that basically the interest is to be 6.2% per annum. And you will see that basically if you are doing a fixed deposit in the year 2017, so till 2022, clear, if there is a 5-year deposit, your interest rate is to be same, that is 6.2%. Clear? Your interest rate is to be same, that is 6.2%. Clear? So we can say that basically this is an agreement between you and the bank that they will provide you the 6.2% interest rate. Clear? That is basically they will provide you the 6.2% interest rate up to this much tenure. Clear? After this much tenure. And after that, basically after the renewable time, clear, basically the organization basically will pay you that interest basically as per the prevailing rate. Clear? As per the prevailing interest rate. Okay, so this is basically comes under the acceptance of deposits. Now further, return on the unclaimed deposits. Clear? Second one here, that is the return on the unclaimed deposits. Clear? Very, very important. That is return on the unclaimed deposits. Unclaimed deposits. Clear? First of all, basically, I will tell you basically what are unclaimed deposits. Clear? If anyone know basically what are unclaimed deposits, please tell fast basically what are unclaimed deposits. And basically, after few years, the funds basically will be transferred to the RBI. Clear? The funds basically will be transferred to the RBI. Clear? So that few years is equal to 10 years. Clear? Basically that few years basically is equal to 10 years. Clear? Basically if the account is not in operating status, clear, basically for the 10 years, so the funds basically in that account basically will be transferred to the Reserve Bank of India. Clear? The transfer to the Reserve Bank of India, or we can say that basically to the DEF. So what is DEF and what is all these things now basically we have to discuss. Clear? So the returns on the unclaimed deposit. So bank has to file a return every year. Clear? Basically banks have to file a return every year basically on their unclaimed deposits. Clear? Banks have to file a return every year on their unclaimed deposit, basically under which section? Under section 26. Under section 26 of the Banking Regulation Act. Okay, so section 21 of basically section 21 related to the advance overall banking, 35A, 36 prohibit, section 26 unclaimed deposit. Okay, just you have to, like I am doing, just you have to revise in this way. Clear? This is one of the easiest topic. Clear? Easiest subject. Clear? If you will do revise properly. Clear? No need to cram anything. Clear? There is nothing cramming. Just you have to do revise. Clear? Basically, we have to do revise. As we are continuously revising, basically we are able to remember all these things. Okay. So basically, banks have to file a return every year basically on their unclaimed deposits under section 26 of the Banking Regulation Act. So the return has to be filed. Clear? Basically that return. Clear? This is also 0.5 or 1 mark question. The return has to filed basically within 30 days. Clear? The return has to file basically within 30 days of the end of each calendar year. Clear? The return has to file basically within 30 days of the end of each calendar year in the form and manner. Clear? Within 30 days of the end of each year in the form and manner basically prescribed, and should cover all deposits basically not operated for the 10 years. Clear? And it should cover basically all deposits basically that are not operated for the 10 years. Okay. So in the case of the fixed deposits, clear? Basically in the case of the fixed deposits, the period of 10 years basically starts from the expiry of the period of the deposit. Clear? And the period of the basically in the case of the fixed deposit, the period of 10 years basically when it starts basically starts from the expiry of the period of the deposit. Clear? Basically starts from the expiry of the period of the deposit. Clear? So that is basically comes under the return on the unclaimed deposit. Okay. So basically you have to remember it. Basically first one is the section and basically of which act of the Banking Regulation Act, and basically that basically it is basically for those accounts basically which are not operated basically for the last 10 years. Now move to the next one further. So basically where this fund goes, basically we can say that basically to the RBI. So basically RBI has a specific fund that is DEAF. DEF. So in this regard, it is notable. Clear? Basically in this regard, it is notable that the RBI had formulated a scheme. Clear? Basically in this regard, basically it is notable or noted that the RBI has formulated a scheme. Clear? Basically that the RBI had formulated a scheme known as the, clear? RBI had formulated a scheme basically known as the DEF, Depository Education and Awareness Fund. Clear? RBI has had formulated a scheme basically that is known as the Depository Education and Awareness Fund, or in the simple language we can say the DEA fund, or we can say the DEF. Generally basically you will say that the DEF scheme. Clear? In the year 2014. Clear? So basically this scheme basically emphasizes the duty of the RBI towards a valuable deposit basically made by the banking customers across the country. Clear? Across the country. Clear? This fund basically if any claim comes in the bank, clear? Like we can say that after 15 years. Clear? So basically the bank will get this amount. Clear? Basically from the RBI they will put the basically request in the portal and they will get their amount back. Clear? Basically they will get their amount back. Clear? So otherwise basically if there is not any claiming, as basically it shows basically by the government, that is continuously basically there is increase in the unclaimed funds. Clear? There is increase in the unclaimed funds. Clear? There is continuously going on. Clear? That's why basically RBI focus on nomination in the accounts. Clear? Nomination in the accounts. Nomination in the accounts. So nomination basically not to let basically decrease in this one, but to settle the death case. Clear? To settle the death case. Okay. So this is basically regarding the return on the unclaimed deposits. Clear? Basically this discussion is regarding the return on the unclaimed deposits. Now move to the further. So basically this fund, that is the DEF fund. Basically, this fund has been created. Clear? Basically, this fund has been created, and all banks have been advised. Clear? Basically, and all banks basically have been advised to transfer the balance basically in inoperative deposit accounts that have been not been claimed basically or operated for a period of 10 years. Clear? Basically, that have not been claimed or operated for a period of 10 years or more, or any deposit or any amount. Clear? Basically, or any deposit or any amount remaining unclaimed. Clear? Or any deposit or any amount basically that is remaining unclaimed for more than 10 years to the deaf fund. Clear? Basically, for more than 10 years to the deaf fund. The depositors, very important, that I have already tell you. The depositors basically, however, are entitled to claim from the bank his deposit or operate his account. Clear? Basically, claim the fund from the bank his deposits or operate his account after the expiry of 10 years. Clear? Basically, after the expiry of 10 years, even after the unclaimed deposit funds basically have been transferred to the deaf. Clear? Have been transferred to the deaf. Clear? So the bank is liable. Clear? In that case, basically, the bank is liable to pay the deposit amount to the depositor and a claim of refund of such amount basically from the deaf fund. Clear? And claim a refund of such amount basically from the deaf fund. Clear? From the deaf. Okay, so basically this is the, and basically where this fund is to be used. Clear? Basically where like basically for the social welfare schemes, or for the senior citizens. Clear? These funds are to be used by the government. Clear? Basically these funds are to be used by the government. Clear? For implementing the social welfare schemes, or basically for the senior citizen. Clear? Or for the senior citizen. Now further, however, the most interesting part of this scheme is that the banks are obligated to transfer the said amount basically from the dormant accounts to the deaf fund along with the interest accrued thereupon. Clear? Basically along with the interest. Clear? Along with the interest accrued thereon. So the rate of interest payable on interest bearing deposits transferred to the fund was initially 4% per annum. Clear? Like basically you are not operating the account for 14 years. So whether basically you will get any interest or not, they are mentioning here that is the interest basically initially was 4% per annum, which has been changed to 3.5% per annum with effect from July 2018. Clear? Basically for the updated, we will update you as per the RBI website. Clear? Clear? Just for the information purpose. Clear? Basically this is not as per the syllabus. Just for the information purpose, I will include this slide. Clear? So that basically you are able to understand whether any interest is provided to you or basically to the customer or not on the deaf amount. Clear? On the amount basically that is transferred to the deaf. Okay. So the rate of interest basically payable on the interest bearing deposits transferred to the deaf fund was initially basically 4% per annum, which has been changed to 3.5% per annum with effect from July 28. So therefore, as per the set scheme, the banks are ought to update the list of unclaimed deposits or inoperative accounts, clear, which are inoperative or inactive for the 10 years or more basically on a monthly basis. Clear? The bank has to update the list basically on the social networking site also. Along with basically they have to transfer the list basically to the RBI. Clear? That basically which accounts are inoperative basically for the 10 years or more. Clear? Basically for how much time period? Basically for the 10 years or more. Clear? So that basically they can transfer that funds basically to the deaf. Next one here. This is basically regarding the deaf. Next one here basically very important, that is nomination. Clear? That is nomination. Clear? Nomination here basically in our today's session basically we will discuss regarding the nomination only on the saving account. Clear? Only on the saving account. Clear? We have to cover the nomination basically on the safe custody or safety lockers also. Clear? And after that basically I will tell you basically what is the difference between the safe custody and the safety locker. Clear? Safe custody and the safety locker. So repayment of the deposits. So section 45Z, this is very important. Definitely you will get either 0.5 or 1 mark question basically from that. Very important for the examination point of view. Clear? You will find this type of question every time. Repayment of deposit. So section 45ZA of the Banking Regulation Act basically provides that the depositor or depositors of a banking company, including cooperative banks, may nominate one person. Clear? Basically may nominate one person basically in the prescribed manner as a nominee. Clear? Basically may nominate one person basically in the prescribed manner as nominee, to whom the deposits basically may be returned. Clear? Basically, or to whom the funds basically may be to have paid. Clear? To whom the deposit basically may be returned in the event of death of the sole depositor or depositors. Clear? Basically, in the event of the death of the sole depositor or depositors. Clear? In the event of a death. Unless the nomination is varied or cancelled. Clear? Basically, unless the nomination is varied or cancelled. Basically, there are three forms: DA1, DA2, DA3. Clear? Basically, you will check that in your account opening form. Clear? In your account opening form. Basically, which form is present basically for the creation of the nominee. Clear? Basically, for the creation of the nominee, there are three forms. Clear? First one is the creation of the nominee. Second one basically for the cancellation. Third one is basically for the modify. Clear? So I request to all of you, please tell in the comment section which form is basically for the creation of the nominee, which one is for the cancellation of the nominee. Third one is basically which one is the modify the nominee. Clear? Basically for the modify of the nominee. Clear? So unless the nomination is varied or cancelled, the nominee is entitled to all the rights of the depositor. Basically when the role of the nominee comes basically in the event of the death of the depositor. Clear? Basically basically in the event of the death of the depositor. So rule 2 of the Banking Companies Nomination Rules 1985 provides for the procedure and forms for making nomination basically in respect of deposits with the commercial banks. Clear? Basically rule 2 of basically which, that is Banking Companies Nomination Rules 1985. Clear? Similarly, in the case of the cooperative banks, clear, similar provisions are incorporated basically in the cooperative banks nomination rules 1985. Clear? Similarly, basically for the cooperative banks, clear, rules are to be implemented. Clear? Rules are to be implemented. Clear? So in this session, basically we have to discuss up to this much point. Hope it is clear to all of you. In the next session, basically we have to discuss articles in the safe custody and safety locker, and basically which act, under which act basically we have to keep the nominee here, and what is the difference between the safe custody and the safety locker. Clear? And after that, basically we have to discuss some important points regarding the loans and advances. Clear? So in this session, basically we have to discuss up to this much point. Hope it is clear to all of you regarding what we have discussed today. Clear? And I request to all of you, please go through the session at least once again, so that you are able to understand all these terms and conditions. And at the end of the topic, basically we will provide you some questions for the practice along with the slides for the revision purpose. So thanks to all of you for joining this session.